Greetings, ladies and gentlemen. I hope you are doing well in your studies of forex trading, and I just want to encourage us to keep on learning, and I'm very certain that soon you shall be profitable. It is not whether if you're going to be profitable, it is a matter of when, and to a large extent that depends on you. If you keep on working hard, you surely get there. So in this short video session, I shall be showing you a very important trading concept, and it is how a trend changes direction. In other words, what we refer to as change of structure. When we talk about the structure of a particular market, we are simply talking about the direction of the market, and we have two main categories of structures. The first one is a trendy market, which is divided into the uptrend and the downtrend, while the second category is the ranging market. In other words, we say the market is consolidating. It is not making an uptrend movement, neither is it making a downtrend movement. Okay, and it may interest us to know that for about 80% of the time, the market is usually in a ranging pattern, and by that we mean in a sideways movement. And in most cases, when the market is ranging, it does not give us opportunity to trade. It is only when the market is trending, in most cases, that there are more and more opportunity to trade and to make profits. This short video is going to be explaining to us, for instance, at what point an uptrend changes to a downtrend and vice versa. We need to know, because as the saying goes, the trend is your friend, and the significance of this statement lies in the fact that if you are having a market that is in an uptrend, it is more advisable to buy than to sell, while in a downtrend market, it is more advisable to sell than to buy. In a ranging market, most people will tell you just go away from it. So you should be able to identify these trending markets. So for instance, you are seeing an uptrend, you should never try to place a sell. If you are seeing a downtrend, you should only be thinking of selling and never thinking of what? Buying or placing a buy. Is it doable? Can we actually sell in an uptrend and buy in a downtrend? Yes, of course, but you must take note that at that point in time you are trading the pullbacks and or the retracements, and it requires special skill. So for us new traders, it is most advisable to trade with the trend. In an uptrend you buy, in a downtrend you sell. The trend is your friend. The key takeaways of this short video session shall be: an uptrend continues in the uptrend when a new higher high is formed. That is when the most recent swing high is broken to the upside. The uptrend potentially reverses to a downtrend when the most recent higher low is broken to the downside. Okay, the formation of a lower high further confirms the reversal. A downtrend continues when a new lower low is formed. That is when the most recent swing low is broken to the downside. The downtrend potentially reverses to an uptrend when the most recent lower high is broken to the upside. The formation of a higher low further confirms the reversal. So without much ado, let us go straight to the illustration on the whiteboard. Sorry about this. Trying to get some space so we can explain more. Now let me first of all explain why it is better to buy in an uptrend or to sell in a downtrend. An uptrend can be in this fashion: higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, now we have what we call the push phase and the correction, or we call the impulsive move, the corrective move, the impulsive move, the corrective move, the impulsive move, the corrective move. The impulsive move is in the direction of the trend. Okay, so we have an uptrend. The move in the direction of the trend is the push phase, or the run, or the impulsive move, while the move opposite to the direction of the trend is the corrective move, or the retracement move. So we can refer to this as impulse correction, impulse correction, impulse correction. So in an uptrend, it is better that you trade the impulses, because as you can see, they are longer and they have a better opportunity for profit than the corrections. The corrections are very short. For instance, if you decide to buy here, you will have this whole length for you to get a good profit. But if you decide to sell in an uptrend, if you are not careful, you have a very short opportunity for you to make profit, and before you know it, the price will begin to turn and it will hit your stop loss. So that is why it is advisable to buy in an uptrend, because you have a better opportunity of profit in an uptrend. The reverse is the case for a downtrend. Let me just try to quickly illustrate that. We have a downtrend this way, so you can see this is the impulse correction, impulse correction, impulse correction, impulse correction. Like I said initially, the move in the direction of the trend is the impulse, the one against it is the correction. And in a downtrend, it is better to sell the impulsive move, okay, because the impulsive move is longer than the retracement move. So if you sell here, for instance, is better than buying here, because selling you have more opportunity for profit, and buying you have very short opportunity for profit, and if you are not careful, the trade will reverse and eat you for a loss. So that's exactly what we mean by buying and selling along with the trend. That is not part of this video, but I just wish to try to explain it to you. Alright, so let's go straight to what we have. An uptrend continues when a new, okay, let's just draw it. You see, we have this, we have an uptrend, retracement, push, pull back, push, pull back, push, pull back, pull back, push, pull back, sorry, push, push, pull back, so on and so forth. What I'm trying to do is to show you is to show you how a trend changed from uptrend to downtrend. Possibly we want to use a better diagram. Let me just try to draw something better for us to get the feel of, okay. Something like this, okay. Okay, I think this is better for explanation purposes. And we have this up, we have the downtrend. Now, an uptrend, in an uptrend we have high, low, we have a higher high, and we have higher low, okay. Higher high, higher low. This is higher high, this is a lower high, this could be said to be a little bit low or a little bit higher than this higher low, but we can accept it as a low, a lower low. These are lower lows, these are lower highs, lower highs, and lower highs. Actually, an uptrend is characterized by price making higher highs and higher lows, while a downtrend is characterized by price making lower highs and lower low. So take note of that. At what point does the price pattern or the structure change from higher highs and higher lows to lower highs and lower low? You know, change from higher highs to higher low, from higher highs and higher low to lower low and lower highs. That's what we're trying to look at. An uptrend continues when a new higher high is formed. For instance, this is a high, sorry about my mouse, this is a high, this level is a high. You cannot get an uptrend unless this high is broken to form a higher high. Otherwise, we may be seeing some kind of movement like this, and we call it a ranging market. Okay, so I believe that concept is very clear. An uptrend continues when a new higher high is formed. That is, when the most recent swing high is broken to the upside. I think that is clear. Before I proceed, I would like to make us understand what I mean by swing highs and swing lows. These are swing highs, swing lows, swing highs, swing lows, swing highs, swing lows, swing highs, swing lows, swing high, swing low, swing high, swing low, and so on and so forth. And these lines are the swing. Swing, 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 swing. So the swing highs and the swing lows, they are actually the turning points. When the turning point is on the upside, we refer to it as a swing high, and when the turning point is below, we refer to it as the swing low. So once again, an uptrend continues when a new higher high is formed. That is, when the most recent swing high is broken at this point, to the upside. The uptrend potentially, you see, we continue to have an uptrend when we are rest assured that this higher high is broken. This new higher high is not formed unless this former higher high is broken to the upside. And the same thing applies here. When price breaks this higher high, that's when it forms this new higher high. Okay, I think that is clear enough. The uptrend potentially reverses to a downtrend. Okay, let's go for the downtrend. For a downtrend to continue, it means that a new lower low must be formed. That is, when price breaks the low, price breaks the low at this point, and see, to form a new lower low. This low is lower than this low, so refer to it as a lower low. Okay, price breaks this low at this level to form a new lower low. The same thing applied here. Price breaks this lower low to form a new lower low. So as long as price continuously break lower lows, you continue to have the trend in a downtrend fashion. So I believe that is clear enough. And let's go to the next point. And the next point is that the uptrend potentially reverses to a downtrend when the most recent higher low is broken. Now the most recent higher low we have here is this low, is this level. You know, we can say potentially is the same thing as this level. Let me see, sorry, pardon my diagram. So we can say potentially is the same thing as this level. Now you don't ever have a change of uptrend to downtrend unless the most recent higher low is broken to the downside. So this is the level, is now broken to the downside. That is when you start thinking of a reversal of the uptrend. If this higher low is not broken to the downside, you don't think of a reversal yet, okay? Because it is possible that price can do this, get to this level, and still continue in the uptrend. It is very possible. But when we have a break below the higher low, the most recent higher low, this is a higher low, we're not talking about this. The most recent higher low is this. When we have a break below it, then we start considering the fact that the trend may be changing from uptrend to downtrend. I hope that is clear. And they went further to tell us that the formation of a lower high after the break of this higher low, a lower high is formed. You know, these are very important points so that you understand what I'm really saying. You know, you understand what I'm saying. These 3 points. Now, for the trend to change from uptrend to downtrend, there must be a break of the most recent higher low to the downside to form a new lower low. And if in addition a new lower high is formed, it further confirms the change, the reversal from uptrend to downtrend. I just hope that this is clear enough. If it's not clear, you rewatch the video, and if it is still not clear, you can ask questions. I'll be available to throw more light. Okay, sorry, available to throw more light. Now let's try to explain the case of a downtrend turning to an uptrend. You have a downtrend this way, lower low, lower high, lower low, lower high, lower low, lower high, equal low, higher. This is what a higher high, higher low, higher high, higher low, higher high, and so on and so forth. Okay, now we have this, the downtrend changing to an uptrend. That's what we have here. Okay, now Forex is very interesting, and there are so many things to learn, but gradually you begin to get them. Now this is a low, we have this as a low, and we can call this one as a high. Okay, because they are the starting point. This is a lower high because it is lower than that high. This high is lower than this high. This is a lower low because this low is lower than this low. We have also a lower high. In the same fashion, we have a lower low, we have a lower low. Okay, sorry about that. We have a lower low. Sorry about the writing, please. Then this low, they seem to be on the same horizontal line, so we cannot call this lower low, we can just refer to it as a low. Actually, this is what we refer to as a double bottom. When you are learning chart patterns, you understand that this is double bottom, and this of course is a lower high because it's lower than this high. Okay, but what happened here, this one is a higher high. Okay, and this one is a higher low, because this low is higher than this low. Okay, this is my mouse. It's a higher high, higher low, and so on and so forth. Okay, now I will want to make the video very short. We know how downtrend continues to propagate and how uptrend also continues to propagate, but what I'm going to focus here is a change of trend. At what point does the downtrend changed to the uptrend? That is what I'm going to concentrate on. Okay, like we said, a downtrend potentially reverses to an uptrend when the most recent lower high, the most recent lower high here is actually this one. This is the most recent lower high, is broken to the upside. Can we notice that point? At what point is it broken to the upside? Bad drawing once again. Let's manage that, please. So at this point, the most recent lower high level is broken to the upside to form what? A higher high. Okay, to form a higher high. So when this happens, you begin to suspect that a trend in change is imminent. Okay, a change in trend from the downtrend to the uptrend is imminent. And we went further to say that the formation of the higher low further confirms. After you have this break and you now form a higher low, it further confirms the reversal. Okay, then you can say that yes, there is actually a trend reversal. Some persons may want to start to buy, want to buy here, because they have confirmed that this downtrend is now what? An uptrend. But some persons who are very conservative, we want to wait until a new higher high is formed. They'll wait for the pullback before they'll place their buy trade. Why does the higher low formation confirms the trend reversal from downtrend to uptrend? Because there is this possibility of the price to even make a new lower low. Do you understand? And price can just still continue in the downtrend. So this is very important. This is very important. This is very important. This is very important. Very important. If not, we begin to have things like this. It's very possible the downtrend will continue. Okay, that's what I mean. This is very important, and this is very important. So once again, this is almost all about what I want to show. I didn't want to make this video this long, but I'm really sorry it's taking long. If you don't understand, please, you are very free to ask questions. Meanwhile, quickly, let me show you a ranging market. Okay, let me show you a ranging market. A ranging market, as we know, is a market. For instance, market was making uptrend and it start consolidating. It's not making higher highs, it's not making lower lows. So we refer to this portion as a ranging market. So what do we do in most cases when we have a ranging market? We stay out of the market and wait to see where the breakout will happen. If price breaks out higher, we begin to look for buys. But if the price breaks out lower, we begin to look for sells. Okay, that is how we deal with the trending market. So with this, I think I have been able to give you some values. These are a little bit advanced topic. Most people will always want to use what we refer to as technical indicators to determine whether the trend is an uptrend or a downtrend. But without indicators, I believe with what I've taught you, you should be able to understand. But one more thing, let's go to a practical chart to see how this concept actually works practically. So you can see that this is a downtrend, and this, of course, you know, is a downtrend. Sorry, it's a downtrend, and this here price is in an uptrend. So I believe this is very clear. Now in a downtrend, this is a lower low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Just watch this lower low, very important point. This lower low, very important point. And this lower high, you see what is happening? The price breaks this lower high. Immediately the price breaks the most recent lower high, exactly this level. This level, that is where we have the most recent lower high. You see price breaking it at this point, okay? This candle was the breaking candle, that did the break of structure. So you see, broke to the upside and form what? A higher low. Breaks to the upside, form a higher low, confirms that this trend is changing. So from here you can start looking for buys. Okay, from here you can start looking for buys. You can place a buy here. For instance, you were not attentive when this opportunity came. Don't trouble yourself too much. Wait for the pullback, then try to place a buy here. Okay, and you can always place a buy here as well. So this is just an illustration. For a downtrend, it is better if you're selling. You can sell here, you can sell here, you can also sell here, and you make some nice profit. So once again, thank you so much for your time, and I believe that this might as well be valuable to you. Thank you.